Hello everyone, this is the pre-market report video for today, 3rd April 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quick takeaway from yesterday's Indian market. We discussed this in the last video in detail because of the drop in US rate cut expectation for June month, which negatively affected our Indian IT stocks. In addition, Goldman Sachs Asia Pacific Research Head mentioned that they expect Indian banks' return of assets and profitability to moderate. I did watch his full speech. He said a lot like last 2 years Indian banks were in the Goldilocks period, but now that is over. Overall, in the whole banking sector, there is an increase in the unsecured loan which increases the risk of NPA. And the loan to deposit ratio is near 80%, which he believes will start to affect the credit growth as well. So he said that at least in the next 2 quarters, Indian banks' profit to moderate. Just for info, only a couple of weeks ago, Goldman Sachs downgraded the ICICI Bank. So at present, this whole statement kind of created the doubt in the whole Indian banking sector about their performance in the next 2 quarters. Hence, in order to change this scenario, banks has to deliver good quarterly results and prove that Goldman Sachs was wrong. Till that time, it's difficult to be positive in the whole banking sector. And if you see the top 5 yesterday Nifty draggers, 4 of them were just IT and banking stocks. Then on the positive side, Indian manufacturing PMI data for March month increased to 59.1 from around 57 in February. This 59.1 value is the 16-year highest ever Indian manufacturing PMI data, which indeed supported the metal stocks and the whole sector increased 1.5%. So, in the last 2 days, metal sector increased over 5%. About institution, for the second day in a row, FII were net sellers. The net sold for 1,620 crore rupees, and still again DI were the one supported the market. The net bought for approximately 1,950 crore rupees. Those were the quick takeaway from Indian market, and now moving to US. Before their market opening, Bureau of Labor Statistics released the number of available job openings that was not filled in February month and which was rolled it out for the March month. The data came as 8.75 million job openings, and it was more or less same as January month value that rolled over into the February month. Here, though the value is same and around expectation, 8.75 million available job openings is the huge number. This further reduces the rate cut probability chance down and increased the 10-year bond yield from around 4.3% to above 4.35%. This is the first negative. Second, Tesla's March quarter sales were below expectation, which made the stock price to crash near 5%. We know Tesla is the index heavyweight. It did drag the S&P 500 and Nasdaq heavily. Third, couple of more FOMC members warned that performing too early rate cut is the bigger risk, and they had no urgency to perform as well. All these pushed the Dow Jones near 400 points down. In the end, Dow Jones crashed 1%, S&P 500 down by 0.72%, and Nasdaq also down near 1%. In case of VIX, from around 13.5, it increased to above 14.5. Regarding oil, there was an escalation in the conflict in Europe, which is now threatening to affect the Russian oil supply. As a consequence, oil price increased above 2%. At the time of this video, WTI crude trading around $85.5 per barrel and Brent crude trading around $89 per barrel. Then regarding Indian ADR, only HDFC Bank closed positive over 1% and Infosys opened lower 0.8%, but while closing it was able to recover all of it. Then the other two, ICICI Bank and Wipro ADR, closed further 0.8% negative. While at the last quarter result time in January, HDFC Bank crashed to the low of up to 17%. So HDFC Bank alone kind of supporting the market since investors trying to reduce their short positions before the March quarter results. Then about GIFT Nifty, early morning today it closed at 22,499. At present, the premium is around 130 points. So equating it with the spot market indicating 100 points gap down opening. It's the same situation as yesterday, but the positive Asian market opening did support it yesterday morning. So I'm not sure whether will it repeat or not and can't predict the future. Either way, for now, it's indicating the gap down opening of 100 points. The status might change as time changes. So that's what happened in the global market. Now let's move to the new India related info. First, yesterday, NSE made the announcement via circular that from May month onwards, they are reducing the index derivatives contract size. For example, at present for Nifty option trading, the minimum lot size is 50 numbers. That from May month onwards will be reduced to just 25. Similarly, FinNifty will be reduced to 25 from the present 40 numbers. Basically, this is nothing to do with the fundamentals, but this will increase the further volatility and will increase the trade volume. Second, about HCL, they disinvested their entire 49% stock holding in the US based some joint venture investment for around 1,500 crore rupees. So possibly HCL will be on focus. Third, Airtel's newly formed service company Bharti Hexacom, which is set to open IPO today, but in that around 50% value money Airtel already raised with global mega investors like Fidelity and BlackRock, etc. Just for everyone benefits, Bharti Hexacom provides mobile, telephone and broadband services under the Airtel brand to customers in Rajasthan and the Northeast region in India. So today Airtel will be on focus as well. Finally, there is a price increase in iron ore and it is positive particularly for NMDC. As a summary, US market closed proper negative and global momentum deteriorated than that of yesterday. So for now, GIFT Nifty and Indian ADR are indicating negative and gap down opening of 100 points. However, HDFC Bank and Infosys looks okay. So hopefully that might support again today. Let's see. Then as per stock open interest, Hindustan Copper, Kotak Bank, ICICI Bank, Axis Bank, Infosys, BHEL and HCL Tech got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Ramco Cement, Havels, SAIL, Voltas, Crompton and India Cement got an increase in open interest with a positive price close indicating the long build-up. About the things to look out, in the afternoon around 1:30 to 2 p.m., Europe's consumer inflation and unemployment rate is due. Then in the night, OPEC Plus meeting, and for US, their service payment data and US private ADP non-farm employment change are some of the items we need to keep an eye out today. Coming to technical, Nifty opened flat and with little volatility, it dropped to below 22,400. Then in the afternoon, it recovered and closed near flat. Thus, on the daily chart, Nifty formed a doji candlestick pattern for yet another session, indicating the tug of war between buyers and sellers. However, still the hourly momentum indicator has a negative crossover, which is a sell signal, and also suggests that there might be some more consolidation before the uptrend resumes. In addition, Nifty continued to face resistance at 22,500. Hence, a decisive move above the same could open for more upside in the near term. While the immediate support is around 22,350 and as long as it holds the same, the overall short-term trend is positive. Then, in case of Bank Nifty, it opened 90 points gap down, but unlike Nifty, it immediately recovered and defended 47,500 on a closing basis. Thus, on the daily chart, Bank Nifty formed a small-bodied bullish candlestick pattern with upper shadow. Hence, Bank Nifty maintained a narrow consolidation pattern with downside support at 47,000 and upside resistance at 48,000. A breakout in either direction could trigger significant market moves. Regarding the weekly options data, the maximum call option open interest was at 22,500 strike, followed by 23,000 and 22,600, with meaningful new call option writing at 23,000 strike, then 22,500 and 22,600. Whereas on the put side, the maximum open interest was at 22,000 strike, followed by 22,300 and 22,200, with new put option writing at 21,900 strike, then 22,000 and 22,100. Thus, from the options data, it's indicating Nifty to face hurdle at 22,500 to 22,600 level on the higher side, with support at 22,300 to 22,200 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.